Mike Murray from Australian Ethical. Welcome to the Equities and Growth Assets Symposium.
Hi there, Drew. Thanks for having me.
Australian Ethical has quite a unique approach to portfolio construction. Can you explain how that works in practice?
Yeah, look, Drew, I think what is unique about Australian Ethical is that we only do one thing, and that's ethical investment. And what really that means for us is that we have an ethical charter, which extends back a long way and it's never been changed. And the basis of that charter is that we invest in what's good for people, planet and the animals. And that's a very different approach to what I might describe as a narrow ESG integration approach, which takes an existing mainstream fund management approach and sort of puts an ESG overlay on top. We start with this premise that these things, people, planet and animals, have inherent value, and then we build our portfolio construction process around that.
And what does that investment universe look like for your domestic equity approach?
Yeah, it's a good question. Look, we're proud screeners, so we do screen heavily for companies that are having positive impact. We're screening out companies that have negative impact, and obviously we're looking at the balance of positives and negatives. On average, we find that about 50% of the companies we look at make it through our charter. And I think, compared to some of the other players in the market, that's a much more true to label approach than you might find.
And how do you approach portfolio construction differently when investing across the market cap spectrum?
Yeah, sure. So we really have a range of different funds. Some of our funds, in Australia, like the Emerging Companies Fund, it is what it says it is. It's an Emerging Companies Fund. It only invests outside the ASX 100 and in New Zealand to some extent. We have the Australian Shares Fund, which has been going for a long time. And that fund is an all-cap fund, and so that can invest really anywhere up and down the market cap spectrum. And more recently in Australia, we launched the high conviction strategy. To make it into that strategy, you need to have a market capitalisation of around 400 million at the time of investment. So that fund skews a little bit higher in terms of average market capitalisation.
And what are some of the secular themes you're seeing within your purview at the moment?
Yeah, well, being an ethical fund manager, I think things that are always on our radar are things like utilities and green energy, things in the healthcare space and obviously in the information technology space. So these are key themes for us, but ultimately we don't describe ourselves as a thematic manager. We're driven by the bottom-up opportunities that are available within those thematic baskets.
And could you expand on two of those highest conviction positions that you have?
Sure, I'll give you two quite different ones. Contact Energy is a company that we like. We've been invested in the renewable energy sector in New Zealand across a range of names for quite some time. What's really interesting about New Zealand, say in contrast to Australia, is around 85% of their energy comes from renewable sources such as geothermal and hydroelectric power and increasingly wind power. We like Contact Energy because what is going to happen over the next decade is that New Zealand's going to go from about 85% renewables to about 95 to 100% renewables. And so what that's going to do is it's providing great opportunities for companies like Contact Energy to increase their production base at the expense of fuels that are more carbon intensive. So Contact Energy will increase its production by around about sort of 30 to 35%. And that's really exciting because in some ways this is an infrastructure asset yielding 4 to 5%. But as that company invests in the future and the decarbonisation of New Zealand, you're going to see that dividend stream start to grow. So you're getting the best of both worlds. You're getting an infrastructure pie with a growing return to shareholders. The other company I'll give you, quite different, technology play in Australia, really attractive market structure, which is the market for e-conveyancing. And that marketplace is largely owned by PEXA in Australia. It's a platform-style business. So if you think about the settlement of property and all the people that need to be involved, such as banks, lawyers, conveyancers, PEXA, by providing a digital platform, is able to take a lot of the hard work out of settling a property transaction. Now, we think, really at the moment they do own that space, but what's really exciting about PEXA is the ability to take that technology offshore. Now, the UK is a market they're actively exploring. There's not a lot in the PEXA share price at the moment for the value of the UK. So, pretty much the PEXA share price reflects the value of their existing business in Australia at maturity. The UK market has the potential to be up to 2 times larger than Australia. So that's another name that we're really excited about right now.
Mike Murray, thank you.
Thank you, Drew.